Hey, for today's Wartime Saints, I want to talk a little bit about investing, what it looks like to invest for the future, thinking about our children, our grandchildren, thinking about the legacy that we want to leave, the kingdom that we hope to plant, even in our little section of the world, for the glory of Christ, which involves investing. And so, these have been some up and down markets. We've had days where there's 30 point swings on the on SPY and even other stocks, and you see one tweet or one alert, and the market moves up. These Trump markets, as they've been called, have been crazy. We've had SPY sell off, from the sixes down to the high fours, then recover and then sell off, and it's really a lot of FUD and uncertainty and doubt in the market. FUD. And it, as we know, a lot of people don't like FUD. A lot of people don't like uncertainty. A lot of people don't like the lack of knowing where the markets are going. And I think it's a good time for us as men to remember that you don't get rich. You don't make huge returns on your investment during pure bull markets. That's where gains, especially those of unrealized gains, get made. And yes, that's at the top of those markets is when you're able to sell and profit at a much bigger position than you bought in. But realistically, especially for those of you that might be investing for the first time, bull markets, meaning when the market is uptrending, when the market is going up, is not particularly where big money is made. For instance, if you think about it in terms of the housing market, the top of a bull market or the rising of a bull market of a housing market is not where big money is made, is not where generational money is made. It's actually in the downturn markets where you could buy houses for, let's just say, blanket prices, just to be easy math, $100,000. And as the years go by, you're able to then possibly sell that same house for 300,000, and you made a 3x on your investment, which is amazing, right? But let's just say if you were to buy in the bull market and you bought the house at 300,000, and let's say it goes to 325, praise God that it increased in value. But realistically, 300 to 325 is not a huge significant gain as 100 to 300. And so while these markets have been, yes, up and down, where they've been very concerning to say the least, I think to employ a dollar cost average method, or even to mark out key levels, if you're able to this, pick up a chart or listen to someone that knows how to look at some technical analysis and say, okay, where are key levels, where are good prices to buy in, where could I set limit orders to scoop up a discount, and to kind of see what even the wealthy are doing. In terms of big money, what we would call whales in the market, they're accumulating. You see that, yes, at the top, they sold their position to newbies and rookies that were willing to buy those high prices, and then the market comes crashing down, and those same newbies then go and sell their positions back to the big money that sold them the same stock or whatever at a higher price. For instance, if I put it in simple terms, it's like if I bought a car for $10,000 and then it went up to $15,000, and I sold it to you for 15, and then the market takes a crash, and then the car's only worth 5,000, and you sell it for 5 back to me. He'll sold it to you for 15, and then I just write it back up again. And so when you really think about the psychological nature of markets, when you think about the psychological nature of investing and wanting to, yes, level up, and you see the portfolio drop because of downturn markets, I think we should think of it more in terms of a discount, or we should think of it more in terms of accumulation, a period that's been afforded to us to accumulate more of a trustworthy asset, to build up that bag, so that when the bull market does come, we won't look back and say, should have bought more. It's very fascinating to me to know that people are excited to buy an asset at all-time highs because they see the value there on the screen, but they're scared to buy that same asset that's not changed fundamentally when that asset is now much lower. Whatever it is, an asset, a stock, a commodity, whatever it is that you're ultimately looking to invest in, um, what 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 needs to be maintained is just that position of, fundamentally, you can't be emotional in these markets. Never risk more than you're willing to lose, absolutely. But you can't be overly emotional. It's one of those things where it's like, just set it and forget it. If you're playing with money that hurts, then you're probably too over leveraged in that space. There should be some, sense of like, okay, this is a little uncomfortable. That's good. But if are over leveraged and it's stealing your joy, then I think you got to revisit, that decision. I think you had to think in terms of, okay, we're risking hundreds, thousands. Well, big players in the market are risking millions and billions. And so what are they doing? Follow the whales in that term, and just know that it's not going to happen overnight. It's not something that, you just amass wealth, over 3 months. It doesn't work that way. It's not the lottery. It takes time. It takes time to build. It takes time to have a portfolio grow in its various facets. And so think long term. Take the emotion out of it. Think long term. See what the rich guys are doing. See what the whales are doing. Know that it's not going to be overnight, and just have the discipline to control your spending. Make it boring. Make it something that's just so routine, so automatic. It just happens every pay period, and you don't have to actively make these decisions. It's just happening in the background. The government knows the power of that. That's why they tax you at the front end and don't expect you to store it up and pay them at the end, because they know, well, if we just make it automatic, it'll just be second nature to be taxed. And so embrace the same mindset. Make it automatic. Have a budget. Do things to actively communicate that investing is not just a little side thing that we do, but it's actually something that we want to make the most of, because God has entrusted to us stewardship over the blessings that he gives to us. So all that in these unstable markets, if you want to call them that, just know that I still think that the golden generation is ahead, that these tariffs will pay off, that long term, this is actually very, very good. And the markets needed this to kind of pop the balloon of the false reality of these prompt up markets that needed change, especially in terms of America's wealth long term. This needed to happen. So all that to encourage you, put your head down, take the emotion out of it, keep investing, be wise, don't be a fool, don't over leverage, trust the Lord, trust Christ, just get a little better every day, invest a little bit more every day, and ultimately trust the Lord to build a house as you labor to build it. And just know that no one ever got rich by saving money in USD. No one ever made a fortune by just stacking away cash. It was always those who invested it into something. And everyone has gone through downturn markets. And I've personally seen firsthand the ability and the potential that downturn markets have when the bull run is fully fledged on, when it's back to an uptick market, and where you can realize those gains. So you got it. Don't panic. Trust the Lord. Keep at it. Think long term. Don't think overnight. Think long term, and ask the Lord to bless your investments.